Fintech, I think, is so vast. You have payments, you have wealth, you have insurance, you have lending. There's a plethora of avenues that the unfortunate part, I think, about fintech is all roads for monetization lead to lending. The scale is there. And that has meant that almost everyone now wants to sell loans. Fintech explodes later. It explodes after year 5. If you slowly grow first 3-4 years, the compounding effect kind of truly plays out. Or get an NBFC license or sell a loan. That permutation combination, now obviously everyone is going down that route. You're just going to be like, okay, like what's going to happen here, right? Is it as exciting from the hockey stick growth that we all love? Me as an agent investor and you as a VC, you love that. Like, I love this attention. I love the stickiness. Let's go. Let's conquer the world. I think वो lending में नहीं होगा वैसे और नहीं होना भी नहीं.
Welcome to the India Opportunity Podcast. Our guest today is Akshay, who's leading Axio as its CFO. Axio is one of the largest fintech companies in India that offers digital loans in the form of pay later, personal credit, and money management services through its NBFC. They have raised over $140 million from some of the best investors, including Ep16, Elevation Capital, and Amazon. Akshay has been with Axio for the last 9 years, where he joined when the company was still called Capital Float. Prior to joining Axio, he spent 7 years on the trading floor at Deutsche Bank. He won the Business World CFO 40 under 40 and has an MBA from Cambridge Business School. I'm excited to deep dive with Akshay into the fintech landscape in the country today and learn more about his journey of building Axio. We will talk about everything from public markets to regulatory changes in the fintech ecosystem and how they affect founders building in the space. For anyone building or investing in the fintech ecosystem, this episode captures a lot of deep insight. And I so look forward to the conversation today. Hi, Akshay. Welcome. How are you doing today?
Hi, Shrishti. Thank you so much for having me. And it's been a good Friday. Hectic slightly, but it's been good.
Thank you for recording this on a Friday evening and not doing something else like normal people would.
I know, but like it's exciting. Normally people get a chance to do a podcast on a Friday evening. It's a rare invite, so you're like, let's do this. It's fun.
Thank you. I appreciate you taking the time out. So, Akshay, let's talk about your journey at Axio. You've been there for the last 9 years. It's a very long stint in the startup ecosystem. So, let's start with what Axio does and give our audience a sense of the overall market. You can talk about the evolution of the company from the days of Capital Float to now Axio.
So I joined what is Axio today and Capital Float back then in 2015. I joined them with a very clear mandate of actually trying to build a co-lending platform, right? The idea was, how do you build a micro debt syndication platform? How do you build a new age tech company that can have low leverage on balance sheet, yet be an efficient, pool of capital to deploy in areas that, let's say, traditional lenders don't do, right? So when I joined in 2015, like I said, we were largely doing MSME lending back then. And we've created and built this entire platform, kind of worked with the regulator, worked with different lenders on saying, co-lending is a good thing. We should try and do it. Wrote white papers, onboarded a bunch of banks, NBFCs, made it work. Till about 2018 when RBI officially blessed this model and said, this is good. This is something that the ecosystem should be doing. And today it's pretty much like flavor of the season, right? So it's been a fun journey because you came into what was an absolute whiteboard on an idea, got together with great bunch of people over the last 9 years who've all contributed to the evolution of this internally, right? So back in 2015, we were largely doing MSME lending. Post-COVID, obviously we weren't sure what the world would look like. And in about 2017, 2018, we kind of started consumer lending. That's when we launched Amazon Pay Later with Amazon. We kind of co-created that product. And we kind of went out and, kind of scaled that over the last few years. Like I mentioned, post-COVID, we said, look, consumer is where digitally things are working, from KYCs to disbursements to customer behavior change that you saw during COVID, right? More people buying online, kind of getting used to these purchases. So it felt like a good time to pivot. And that is when the transformation from Capital Float to Axio kind of happened. We had obviously acquired Walnut back in 2018 as well. So we rebranded the app, kind of said, okay, let's do PFM plus online checkout finance is what we call it. So we kind of said, let's offer checkout facilities online to people, make sure they're managing their money well. And in a sense, how do you make credit good with the thought process that, look, credit when used well is actually one of the best tools that will help you live your life. But the key is managing it well, right? This is why we said PFM plus credit together was a good combination that you can offer people. And yeah, so, since started off wanting to build this, been fortunate enough to be backed by, great colleagues, founders, that the founders felt the CFO role was something that I could do about 4 years ago. And yeah, I've been doing this since then. And today we offer checkout finances across, pretty marquee partners such as Amazon, your Policy Bazaar, Decathlon under Axio Pay Later brand. And then we cross-sell our customers a personal loan. And this is what we do while we co-lend with banks and NBFCs, right? So that's pretty much the entire gist of the journey and what we're doing today.
Amazing. You mentioned some of the most marquee names in the industry as well. But tell me about the lay of the landscape, right? Like when it comes to shifting a business from MSME lending to personal loans, obviously that's a big transition. And a lot of people start building their companies, focused on MSMEs and small businesses, but sometimes realize that, retail is the market. And that's where, we have seen many companies started up in this space also. So can you just, zoom out a little bit, give people a sense of what the market landscape really looks like and where the opportunities are in the fintech ecosystem?
See, I truly believe the opportunities across both MSME and retail are very real. Right now, when we started MSME back in 2015, obviously the organization was built around that. But we did start consumer and retail in 2017. We realized that the credit cycles that you see in India, both of them, like MSME and retail, kind of don't go into a cycle at the same time. So the reason I said, hey, it's a good hedge is they're almost like counter-cyclical to each other, if you will, right? If MSME is going through, retail has historically been good. If retail goes through, MSME hasn't. So we felt it was good. So we had already started from an org perspective, kind of shifting mindset, creating a separate structure for this world that we kind of went in. So transitioning wasn't that much of a challenge because a lot of the ecosystem was there. Yes, when you decide full-fledged to stop something and focus on it, there are different kind of challenges, but we were gearing towards that world anyway. The lay of the land today, I still believe, is very exciting, right? Obviously, yes, there have been questions around growth and trying to make sure unsecured lending as a proportion doesn't increase too much. But I think if you are not hyperventilating about accelerated growth and you're super keen on building a lending business that can be around 10, 15 years from today, which means growing at 10, 12% is not a bad thing. Building the right foundations, growing steadily, growing slowly will get you to the business that whether you do MSME or retail. This country is huge. This is never going to be a one lender take all country.
Yeah.
If that was true, SBI would have eaten all of us for breakfast. They're the largest in terms of reach, in terms of access, everything, right? So everyone has risk appetites. Everyone believes what is right, what is wrong. There's segments. There's a whole plethora of products out there from secured to unsecured to project financing. There's so much you can do.
Yeah.
So any new age fintech starting up will have different set of problems because you need to have a cost of capital to do certain things. If you don't have that and you can't raise money, it means by design, you start in a particular area. But I think the fintech industry, because of the ecosystem the retail segment has developed. And when I say ecosystem, I mean the ease with which Aadhaar can be accessed for verification, video KYC is happening on the phone with just your camera on. That is kind of coming together in the MSME world. And over the next 3-4 years, I expect even that to be more digital, right? So today everyone starts retail because they're like, hey, this solution is available, that solution is available. It's easy to go live, it's easy to start business, right? But you still have to lend and you still have to collect. I don't think that has changed over time. And that remains. So as long as you focus on these two and the ecosystem play for even MSME becomes slightly better, more digital over the next few years, it's beautiful. I think this country always will have lending opportunities. It's a huge nation and credit is always an untapped segment.
And that's very interesting also, right? Because when you talk about growing at 10 to 12%, what we saw in the fintech ecosystem, maybe during the bull run and around that time, was that investors were pouring money into the lending companies, and pushing them for very aggressive growth targets, right? And unfortunately, lending is a business not as much of like growing your loan book, but how quickly can you get that money back into the system. And it's supposed to be focused on collections, but a lot of founders don't understand these nuances when they're just starting up. So can you talk about, since you're leading the company as its CFO, how do you set growth targets within the company, and how quickly would you want to grow versus some of the investors when they really push companies to grow? What is different in the mindset, from operators versus investors?
Yeah, I mean, look, fortunately, I think close to a decade of doing this with founders and various team members, I don't think we have taken on ourselves like I need to grow 50% year on year, right? The testing of waters internally for us has always been when you start a new segment, how is it doing? Watch it for 2, 3 months. Is it growing? Is it scaling? Then we test the waters with talking to co-lending partners, right? Do they like it? That's a good test that we use. Like we talk to banks who are by design more conservative and want to make sure you're more compliant on product structuring, etc. So we always like to run it by, let's say, a big brother, if you will. Right? It might be a big NBFC, might be a big bank, but folks who've been around long enough to know like how the regulator will view this, what growth trajectory do you have. So we have internal guardrails that we are doing in terms of how we are doing it. There's an external partner who is now also monitoring the portfolio with you. So that helps in even if you do start seeing slightly accelerated growth with slightly elevated risk, we are able to scale that back, right? Fairly quickly to levels that we think is comfortable. So we've, I don't know today if I can sit back and say it was by design or if it was by accident, but we have almost, for lack of a better word, and as a CFO, a maker checker, if you will, even on growth trajectories, because you're making it, you're planning it, and there's someone else who's working with you on, very similar goals, if you will. Basically coming and saying, hey, I think you might want to have a look at this. There's one pocket here that I think is doing something, or they'll be like, this is awesome, well done. I'm happy to go grow more with you, right? I think that has helped to a certain extent. Look, in my company, very honestly, we haven't had investors coming and saying, why you guys not growing at 200% when everybody outside is growing. I think investors have always understood that everyone takes a different path to how they want to build it, right? Different channels, different avenues. And I don't know if anyone can confidently stand up and say, only my channel works. What the other guy is doing is wrong.
Yeah.
Because nobody knows. We're all trying. When it works, you'll be like, "Arey, this is awesome. This works." But if it didn't work, it didn't work, right? And then someone else comes, looks at what you did and says, okay, these guys went wrong in ABCD ways. What if I tweak it? Can I make it work? And you'll have an investor who'll be like, sure, go try it. So we've fortunately not had any of our investors ever pick up the phone to us and say, your bottom line isn't growing, your top line isn't growing, go out and double or triple your investment. That hasn't happened for us. The pressure is on us, right? Like, because as people building, we also want the company to grow. We wanted to go out and do things. So I think sometimes it'll be like, oh, can we grow faster? Is the risk holding for us to be able to grow? Go talk to co-lenders and say, hey, like, how do you think this is going to work? Will you be okay to kind of increase exposure? And you have these conversations, right? So
yeah.
I think over time, it's evolved very, very well. Like I said, the first time when I'm thinking about it like a maker checker. So I'm like, I don't think I can call it by design, but just because you need to convince people internally that this growth is healthy and right and not too aggressive, you have to go out and convince somebody else also that this is healthy and right. And they are also not going to lose money by working on this particular path, right? So I think that allows us the stability and flexibility to not grow too fast or grow too fast if you found that right pocket.
Yeah, and also not die in the process of doing that.
Like I said, that's the one thing we definitely were like, we're not going to die. We're very clear.
And but also talk about, since you mentioned that partnering with banks and NBFCs and treating them like a big brother in this case, but like what kind of support have you seen from the banks and NBFCs? Because a lot of the people have this perception that incumbents don't want to partner with fintech companies, which is not really true for insiders, right? Who know what kind of partnerships are happening across the board. So talk to us about some of the things that you've seen. What is the resistance versus acceptance, and is there a push or pull right now from the banks and NBFCs?
Look, I think it's been an evolution, right? When we started in 2015, we went to the first NBFC, and then you went to the first bank with this idea. Everyone was like, "What are you talking about? What is this? What is co-lending? What do you mean a loan is split in two parts? Right? How is the money flow happening? Right?"
Yeah.
So there was a lot of push back then. We were out there literally selling this new product, selling this new flow, trying to make sure flow of money was as independent to the two entities. Everyone would have a question: what if you disappear tomorrow? What happens to my money? So they would ask this question, right? And it hurts when someone asks you a question like, "What do you mean I'm dying? I'm not going to die." But if you're in their shoes, it's the right question to ask. They have their money at stake. So then you start building fail-safe mechanisms on, okay, what happens in the event I actually die? How does the lender get his money? How do I still get my money? Because I'll have lenders to repay on my balance sheet. I have to get money. So the evolution through these hard questions has been awesome because you kind of understand how they're thinking. You understand why they're thinking. So I have not found any resistance from incumbents at any point of time, big or small, coming and saying, "I don't want to partner with you." There are a range of people who partner for different reasons. Some want to understand what you're doing. Some want to learn. Some realize that, you know what, I'm never going to do that TG on my own. But why can't I partner with somebody and still do this and build a different segment and diversify my own portfolio?
Yeah.
Right? So some people start and then after a while they'll be like, "We'll do it on our own." We've had that also. They'll be like, "Oh, now we want to do it on our own. We think we understand this. We'll go and do it on our own." Like, okay, do it, right? To each their own. So we've found amazing support systems around all our co-lending partners, right? Like, we've had partners through COVID, watch us kind of collect during that hard period and grow our consumer book in that period. They've stayed with us. They continue to stay with us. They understand the importance of going through hard periods together. So we get advice on what to look at. If there are any strategies that we are doing differently, so they go into details with us. How are you collecting? What are you doing? When are you going? How are you doing this? So it's a constant learning, right? And it's a great way to be in touch with what's happening in other companies. Because normally if you were just building it on your own, you would just be heads down, building it. You'd call a few friends to know like what they're doing. But here you have a partner who's also working with other people to kind of come and say, "Hey, by the way, you know, I heard in that company, that segment's having a problem. Do you know if you're doing it or not?" So it's a nice way to get market intelligence, nice way to kind of like work together. And I think the biggest area for help has always been around compliance and regulation, right? Because all of us get audited by the RBI independently from different parts of the country. So there is feedback that is constantly pouring. There are questions that are asked that are constantly pouring that allows us to constantly go back, look at our product and be like, "Is this good? Is this full answering all the questions? Should we otherwise go to the regulator and ask, 'I'm sorry, but we got this question. What do you mean? This is what we are doing. Is there a problem with this," etc. Right? So I think it's been very collaborative. And we love partnerships. Just like on the asset side, we go and find big merchants. On the liability side also, we are all big believer in going deep on partnerships and doing it because in scale is where everything makes sense, right? So finding people who are sticky, finding people who can grow, have big appetite, both whether it's demand or supply, and being able to work with them, I think is a very important part of our journey and has helped us avoid, different pitfalls at various points of time.
Would you like to highlight some of the partners that you work with?
I mean, not really right now. Okay. I don't know, but they've been good. Because there've been like 20 partners over the last 10 years.
Okay.
I don't want to forget someone, more importantly.
Yeah, of course. So over the last 9 years, there must have been a lot of inflection points for the company that you've personally seen in your journey as well. We could talk about company culture, processes, dynamics, how it's changed over the last 10 years as you've grown.
Look, funnily, I don't know if at the core of the company culture changed. I think one of the reasons why I have hung around so long is I don't think the founders have changed at the core what they want to do, which is actually build a value-adding lending business to this country. I think that has remained core. When I joined, I had this very simple dream that can I take an idea from the whiteboard and make it real in the real? That's what I wanted to see. Like, are you that guy who can draw something on a whiteboard and then make it a reality, in this practical world we live in? Because in theory and in practical, 20 things go wrong. And the constant I think the ability to recognize we've gotten something wrong, fix it, go back, try again, make new mistakes, come back, fix it, has been a thing. And I've enjoyed it because it's allowed us to constantly challenge ourselves, constantly learn, constantly evolve. And I think a sum total of all those mistakes have allowed us to reach where we are today, right? Which is we're running an awesome checkout finance program that's working really well. And very few people have managed to do this at a global level. So here we are managing to do something right, which a lot of folks have faltered on globally, right? So it's a nice, proud feeling to be a part of that culture. And also, I think the team, right? I think the one thing I will highlight is the set of folks I have worked across over the last 9 years has been like, I mean, I was an investment banker. I was structuring MNC Europe clients may how to, drop their cost of loans by having a swap, a derivative swap with an underlying basket of some fancy indexes. I was in that world to now giving somebody a 2,000 rupee Amazon pay later line to kind of go and, buy is a very, very different world, right?
Yeah.
Or doing an Axio pay later transaction with 2,500 rupees on Decathlon or financing a 15,000 rupee premium on policy. It's a different world, different mindset. So unlearning your big world and learning the lending world and lending in India, which is a fairly complex set of machine, country, regulations to make sure, partners to make happy, your own people to kind of make happy. So I think, all of that the constant learning has kept me here. The ability to disagree with the founders and the founders then saying, you know what, I think you're right, we should pivot, or the founders explaining why they are right and me learning is there, right? Then you have product-free folks from the risk guys, the product guys who think very differently. Why CX is equally important. Like 7-8 years ago, I don't think I would have cared about CX as much as I care about it or understand why it's important today, right? Because from a lending perspective, it was always fundamentally like, hey, is the money going out right? Is the money coming in right? But there is value addition in making sure the money is going in a manner that makes people happy because they come back, right? This learning took time because it's fundamentally geared from a risk and a finance perspective. Because even at Deutsche, no matter what you did, the risk was an integral part to every structuring of a transaction. You wanted to make sure the bank never lost money and the client never lost money. So you're constantly building those hedges in every trade that you do. So risk has always been central. So I think, the evolution in products has happened, the change in products has happened, but I think at the core, the willingness to go and do the hard thing. Sometimes all the stuff can be very dry, very mundane, but everyone rolls their sleeves up and says, karna to karna, right? And that is it's a rare thing to find a set of people, even while those set of people have moved over time, that core philosophy kind of being there. And I think the founders get a lot of credit on actually making sure every new person who comes in has that attitude, right? Saying, karna to karna. Yeah, it's hard. Yeah, it's painful, but what do? You got to do it, right? So I think that is a very, very big reason as to, 9 years in, disagreements are equally important for them to happen, and they do happen. But, you all either disagree and commit or disagree and change or agree and change. All of that is possible.
Yeah, no, absolutely. And thanks for sharing those beautiful insights because that actually shows how strong the company culture really is and how you guys have been able to sustain and stand the test of time, right? Especially through a period like the pandemic, where I'm sure you mentioned it mustn't have been an easy time at all. Do you want to talk about that?
Yeah, it was I think those 1.5 years, I probably gathered like 10 years worth of work experience right there because I never thought I would live. I don't think any of us, to be honest, thought we would live where the world is shutting down. And I never thought I would be in a position where I'm managing a company which depends on inflows for its outflows, but suddenly the inflow tap has been turned off for 2 months and you still have to keep going on the outflows, right? So when I look back now, I think that period was amazing. I think my relationship with the founders became a lot stronger. It was after this period that they asked me if I wanted to take this role. I think they saw my understanding of the business, how we navigated this together, and how we were able to, almost almost turn a ship around at the same time during what was the most, easily one of the most turmoils, the biggest turmoils that we've experienced together, right? Sure, IL&FS and all those other macro events happened, but the world shutting down was something else. So yeah, I think I walked out of those events with increased confidence about my own understanding of lending. I think that for me was the biggest takeaway, because I constantly look for my learning everywhere. I think if I'm not learning, then like I start getting bored very quickly. And that period was obviously very high stress. I won't lie. I think
Yeah.
it was quite bad. I would get up middle of the night and just be like, because you suddenly felt like if you got something wrong, the impact would be so wide. And then there are other people, and the founders had made certain decisions about, making sure no one's going to let that go. Everyone's getting salaries. We are not doing this. Right? And I was 100% on board. The moment they said that, I was like, this is the right way to do it. We have to be true to the people right now and then solve around it, right? If that was the core tenet. We are not going to default on any loans. We are not going to let go of employees, and we're not going to cut salaries. Keep this as the two core tenets. Now find solutions to these problems, right? And look, honestly, at the end of the day, yeah, today I can stand up and say, yes, maybe I'm a little bit more than just an employee because I've been here and they know me. Back then, you were a junior guy trying to show them that you're ready for, not junior, but you were ready enough to kind of make that big step and try and be their partner. For them to be up at 12:31, 11:30 in the night, having debates, having conversations with you, it almost gives you that level of confidence that, hey, they're giving you that space to come up, and then you're learning, they're learning, you're all growing together. It's what startups are, right? It's what people like, at least me, come to startups for, saying, yeah, it's a hard problems to solve, hard situations to be in, and you're doing it with a set of people who are equally passionate about it, right? Yeah. So I think all of that was, I can look back today and be like, oh, it was fun. But if we had known each other back then, I'd have probably been like, I have no idea why I'm putting myself through this. But I think it's worth it because, like I said, the experience you get is unparalleled. I think very, very few people could have kind of gone through that. And, at a relatively younger age, 35, 36, you don't get to do of this scale, right? So, yeah, it was definitely a turning point for me career-wise.
Came out of it alive. So I think that's one good thing.
I told you, right? Those two. Actually, add a third motive to that, right? We're not going to die. We're going to pay our lenders, and we're not going to fire employees. So, like, you pivot on these, and you can do it. So, I think the one thing I think as in just as a philosophy is we have to do whatever it is to make sure the company is around and can grow. Yeah. Right? So, if it means we look bad for 6 months or 1 year, so be it. You cannot, like, in lieu of optics, risk the org.
Yeah.
Right? That I think was a great learning for me, and constantly putting the org first. If it meant we had to go through discomfort, we did. Right? And if it meant a larger org was good, so be it. Right? Then these are the right calls when you're building a company. It's impossible that every person who's ever walked through our doors has loved the company culture. I'm sure people would have had different varying opinions over time. But this was always the attempt. At least since I've been there and I've been very close for my entire duration here, I've never felt it any otherwise. It's always been like, how do you make sure the org is first, and then the culture kind of starts seeping in from there.
And contrast that to your days in banking. You were on the trading floor at Deutsche Bank for 7 years. So talk about that experience as well, because and what were the learnings that you took from that experience into building Axio? And what are the things that continue to help you?
Look, Deutsche was a different animal altogether. Like I said, trading flow, structuring flow, working across Europe and India and then Southeast Asia. I think, look, I started off life as a TA, as a trader's assistant. My job was to build risk and P&L. I'm not a chartered accountant. So it helped. I will not lie. That understanding of a P&L structure in my first job, I think helped me do my job today. Because मैं CA नहीं हूँ. I'm terrible. But understanding risk, understanding the P&L, have stuck with me from then till now, right? So I continue to do that even today. So
especially
I think that has been
a business like Axio, right? It's more of a risk management business than anything.
It is anything. It's liquidity management, it's risk management, and it's managing the P&L. Yeah. The entire 2 years I was on the structuring side is how I'm able to come up with solutions today, right? There is a set of rules, regulations in France, there's a set of rules and regulations in Thailand. Company A in Thailand, headquartered in company B, can't move money out. How can you proxy move money without money really leaving? This is what I did in Deutsche Bank. Capital controls in Southeast Asia. The headquarters is there. They're sitting on profit. How do you move money out? Synthetically, but you come up with an answer. So the beauty of saying here is regulation. Now be creative within this space is something I was trained. And that, I mean, put that in the fintech world, right? And that's literally it.
Yeah.
So when I look back, sometimes like, this is when you start believing in destiny. Like everything you do growing up suddenly starts making sense as your career moves, saying, oh, wait, I know this. You don't know you know it, but intuitively it kind of comes. So I think every single decision I took in career change at Deutsche Bank, the challenges I took for myself have all led to this event. I was so funny. I was talking to my wife, I think last week, and we were just discussing this. And I said, if I didn't do this, I don't think today I would know how to do this. And this I did in 2008. How crazy is that? But life, right? And these things are there for a reason and they happen for a reason. So
And the dots always end up connecting.
You will not believe, for me personally, professionally, the last 2.5 years, I've seen dots connect that I never thought would connect. It's just been amazing. And you're just like a full flow believer in destiny at this point. Like I always believed in it, but I think now it's just beyond reproach. Like I will be like, jo kismat mein wohi hone wala hai. Don't worry about it anymore.
Oh, amazing. And, since you touched upon the regulatory aspect of things, let's dive into what's happening in India, right? A lot of people have this perception that regulators are not very supportive of fintech companies. And an investor I met recently said fintech is dead. Given you're in the space on a day-to-day basis, what do you feel about the overall fintech ecosystem and its relationship with the regulators?
Look, I don't think fintech is dead. I think that's just it's like a meta statement to make, and I'm sure they're frustrated with changes, etc. Right? But look, I was talking to someone about this, and I said, look, I think what has happened is, like everything in life, the sector has evolved. 10 years ago, it was a blank canvas. People all had ideas, right? The regulator was watching, then came up with a set of rules in the larger interest of the country and how they want the financial system to run. Now, depending on which side of the line you were, you either were like, great, awesome, okay, fine, small tweaks, and I'm okay, or you're like, oh my God, my life is destroyed. It completely depends on just where you were. Now, the way I look at this is, I think that every country, by the way, whether you look at the US Fed, look at the FCA in UK, RBI in India, whoever you want to, there is a certain financial culture they are aware of that the masses pertain to or the masses have. So every decision taken ends up on that level of financial maturity, right? So you will find markets more developed out there because the regulator there believes majority of the people are sophisticated and understand how you are. Where you have people more conservative, they're a little more worried about the fact that, hey, I don't know if people are that mature and understand what they're doing. So I want to make sure they don't get hurt in the process and they come up with things. It's very easy for us as a country. And, I think sometimes we get lost in our own privilege that we're like, hey, how can someone not understand this? It's not obvious. Hai. Nahin. Yeah. Especially in India, 100% nahin. Right? People can't read the language. They just sign. They're interested in the today. Sometimes they're like, am I getting this today? Fine. I'll do anything for that. Right? So I think regulation around the entire fintech industry has evolved because there were no regulations before. What regulation did you have for fintech 10 years ago? Like when co-lending the regulation came in 2018, we were doing it from 2015, 2016. Right? So there was no regulation. So I get the skepticism. I hear it from a lot of people as well. They were like, oh my God, it's not the flavor of the season anymore. But fintech, I think, is so vast. You have payments, you have wealth, you have insurance, you have lending. There's a plethora of avenues.
Yeah.
That the unfortunate part, I think, about fintech is all roads for monetization lead to lending.
Yeah.
The scale is there. I think that is the unfortunate part. And that has meant that almost everyone now wants to sell loans. And now that
get an NBFC license.
Right, or get an NBFC license or sell a loan, that permutation combination. Now, obviously, if everyone is going down that route, you're just going to be like, okay, like what's going to happen here, right? So they've come up with rules of the game. They've come up with stuff like, okay, they're not saying, for example, it's not like they're not stopped issuing NBFC licenses. That's not happened. People are still getting NBFC licenses.
Yeah.
Someone we know just got their NBFC license, which is like amazing news for them. Yeah. But it's there. It takes time now. They're just being more careful. They're just looking at who is it? What do you want to do? and they're taking time, but they're not saying no. So is it as exciting from the hockey stick growth that we all love? Me as an agent and you as a VC, you love that. I love this attention. I love the stickiness. Let's go. Let's conquer the world. I think वो lending में नहीं होगा वैसे भी और नहीं होना भी नहीं चाहिए. So yeah, the old way of doing fintech and the old way of running fintech or the mental models people had just have to be recalibrated in my view. And for me, fintech is a 10, 15-year journey, if not a 20-year journey, if you are serious about building a company, right? So the question I would ask any new fintech lender is, in fact, I think today is an awesome time to start something in fintech. Never have the rules of the game been so clear.
Yeah. Otherwise, there was always so many gray areas, and lawyers will actually tell you that this is a gray area, you can operate in it.
But we have gotten advice from such seasoned names saying, अरे मतलब सब करें कर लो, कुछ फर्क नहीं पड़ेगा तुम्हें.
Yeah.
तो वो अभी हम पे आ गया कि तुम कंजर्वेटिव बनना चाहते हो कि तुम हीरो बनना चाहते हो, right? Where do you stand? I say hero today, but back then it felt like it was the right thing to do for everyone, and we felt like, oh, are we missing out on something? So it just kind of like plays, right? So, but I think if you're starting today, there are such clear lines that, okay, like I told you, here's the box, go innovate.
Yeah.
And anything to do with money, anywhere in the world, is always going to be like this. Now you can question, अरे इंडिया में इतना है, अमेरिका में इतना है, but इंडिया में हो तो इंडिया में इतना है, करो. Then what do you do, right? Because the market is, so you want the TAM of India, you want the regulatory oversight of US, you want the currency of something. I mean, sure, in a utopian world you would get everything, but like we live in this world, and you've got to dance where you are. You got to dance to the music that's being played. So here's the music. All right, innovate the way you can. So I still think fintech is awesome. I still think the right set of people with the right mindset. I think what fintech needs is a little bit patient capital. If you're able to get patient capital, help guide early stage companies, put in the right groundwork, fintech explodes later. It explodes after year 5. If you slowly grow first 3-4 years, the compounding effect kind of truly plays out in a fintech company, right? Especially if you're lending.
Yeah.
So,
and there's a reason, right, why 70% of our market cap almost is with banks and NBFCs in the public markets.
It's 1.4 billion people. It's 1.4 billion people in a country where credit is a problem. It's where everyone needs money for different permutation combinations of things. So how can fintech die?
Yeah.
There's so much to do. In fact, any new fintech, when they come and they're like, I've got a new idea. And sometimes I'm like, forget new ideas. So many incumbents are doing so many things where just improving efficiency will unilaterally change either cost or experience or revenue. There's so much inefficiency just across systems, including today I'm a decade-old company. I'm sure there's inefficiency in my company as well. So any new thing that solves for this or decides to do this differently with the tech available today, you will find a way.
Are you talking about infra plays?
I'm talking about infra. I'm talking about lending plays also, right? See, infra play is a given. I think infra play is the one play that will continue to grow, right? In fact, if you notice, what I've noticed in the last year, there's been a big push on infra plays, right? Because the lending domain is getting hard. People are doing so. A lot of new companies are, especially the love for AI right now. There's like so many guys trying to build so many infra plays with an AI angle to it that is all going up, right? So it's an interesting time. But infra plus, why can't a new age company start today? A lending company. Why can't? The only thing is, the big guys are there. Will you be able to take market share? I mean, when we started, people would always ask, why can't, company A do this on their own? Why can't company B do this on their own? And this question will always be there.
Yeah.
And if the answer to this question is, wo kar lenge, hum kyun kare? So फिर the startup ecosystem only will die, right? Like, your idea is, वो कर रहे हैं, but they're doing 50 other things. This is one of 50. I will do just this one thing. So just by design, I will be better than them. And sure, that company might end up saying, okay, I'll buy you, or I will grow big enough to compete with them in that one thing. So like, why not? Right? Yeah. So I love this space and I love finance. I think tech is an integral part of everyone's life right now. You're having guys enter the workforce, who are today, 22, 23. So imagine in the next 5-6 years, in 2027, I always remember this, I always tell this myself, or 2028, 29, you will have a generation of people who don't know what life without a smartphone is, because that's when the iPhone came out first time, and then the
Yeah.
world has never been the same. Entering the workforce, entering the banking system, entering the economy, demanding everything to be one tap away from them. Because they're like, मुझे किसी से मिलना नहीं है, मुझे किसी से बात नहीं करनी. That is literally the next 5 years. You're going to see the massive young population enter, right? So how they work, where they work, how they earn money, how they invest their money, the kind of services they will demand. Just think of the whole plethora of things that you want to do. Suddenly you're like, this is why the tech and startup ecosystem is like, hey, this is all going to be tech first. But now it's going to get even sharper with even more shorter attention spans, trying to kind of deliver products that are going to be life changing. So I think it's exciting. I think there's so much to do, so much to teach, so much to learn. So I'm like, hey, there's a lot you can still do. So I really hope fintech is not there.
And
Um,
interestingly, while I also love fintech, that I think
I
majority
do.
of the deals I've said no to have been because of you. But
I'm sorry. I apologize. Uh,
what are your thoughts on lending plays getting NBFC licenses, right? Are startups only investable if they have an NBFC license, or when would you say, even for like earlier rounds or earlier fundraisers, how should the founders think about it?
it depends what you want to do. Right? This is a question I asked, right? So if lending is your core and you feel, hey, there's a segment of people who are not getting lending and I want to lend to this segment because everybody out there is doing it wrong, please get an NBFC license. Because without that, no one is really going to believe you, right? In fact, one of the first questions I asked Gaurav Chauhan when I was interviewing back then is, do you have an NBFC license? Because I said, if I want to do co-lending, and very fortunately, they were the similar mindset, right? They were like, in this country, we say India is a low trust economy, right? Now, it's a low trust economy because the सामने वाला bank will be like, अच्छा, if your underwriting is so awesome, कर लो ना तुम्ही, मेरे पास क्यों आ रहे हो?
Yeah.
It's a valid question.
Yeah.
And it's only possible if you have an NBFC license. So if you are solving a credit problem, right, please. Now, if you're somebody who is solving an ancillary problem and credit could be an awesome byproduct, then yeah, you don't need an NBFC license. So the question to ask, or ask myself eventually is, what is your core value prop to your customer? Are you saying, sir, you are using ABCD product, ma'am, you're using XYZ product, I can change your life with this. So yeah, if you're somebody who's saying, ABC problem, ABC system, I can do it better, then by all means, go build that system. And then फिर वो system से अगर आपको credit becomes a play, it's a great avenue. But you have to decide where you want to be, right? See, we joke about this in general, saying like, RBI, like, घोसला का घोसला में बोला था ना, broker या party. And I'm like, yeah, decide. It's very clear. आपको क्या बनना है? And play your role very clearly. Right? So I don't think NBFC license is mandatory, but if someone comes and says a credit problem I'm solving, sure, by all means you can do an LSP and then say I'll get an NBFC license. That's also 100%, by the way. It's fine. But then what matters is anyone actually coming from a serious lending pedigree? Have they lent? Right? Or are they going to appoint a team that has lent? So you can learn what your TG goes, it's a new TG, etc. And eventually you'll get your NBFC license. So even that's a good investment. But I think it just boils down to that. That's the question I constantly ask myself is, what are you doing? And if credit is ancillary, then you don't need it. But if you are like, no, mujhe credit karna hai and I will teach the existing lenders how to lend, that's a bit of a stretch.
Yeah.
वो मुश्किल हो जाता है.
Yeah, absolutely. And, just on the regulatory aspect, I think the SEBI chairperson was in the news recently because she said something on the lines on won't allow contamination like Paytm in the stock markets. This is a big statement to make against a public company. Overall, the stance of SEBI and RBI haven't really favored Paytm, and it's been facing a lot of challenges. What's your take on the situation, given you interact with the regulators closely? And what does it hold for the fintech companies who are waiting to go towards an IPO?
I truly do not know what she meant by that. I don't know if I'm in any position to comment on what happened at Paytm or what they went through. Because, look, as everybody in this country, Paytm was the poster boy, the OG god, remains the OG god of everything fintech. what they built, how they grew, how they scaled. Just the vision Vijay had, I think of, it was just brilliant.
Yeah.
Right. I don't think anyone will envy the scale they got and the growth they got. Clearly, something happened. I'm not privy to what went on over there, so I don't know if I can comment. But look, the thing that I have taken away after this 9 years is our regulator likes to look at our ecosystem in a particular manner, looks at the larger country in a particular manner, and is ensuring this ecosystem is fitting in with that larger picture that they do. Now, they will do anything to make sure that no one is disrupting the larger stability of it. Now, everything I have seen, my instinct and what things we have done in this company have always erred on the side of being a little bit more conservative and always going and asking the regulator, can I do this? Can I do this? Can I do this? The regulator come back and saying yes, yes, no, no, yes, no, yes, no. And then you go back to the no's and be like, if I do this way, is that okay? They say, okay, great. If they say no, by the way, we don't like this at all, then fine. Now, the hard part is getting an audience constantly, the regulator, to keep doing this, because imagine every single company going and asking this question.
Yeah.
It's kind of hard. So you obviously use a bunch of intermediaries, you make a judgment call, you talk, you figure out how it is. Now, there are a lot of bodies for digital lenders. I think they've asked for self-regulating organizations to also be set up now. So there's now an ecosystem play available. So anyone looking to enter fintech, trying to understand the do's, don'ts of the ecosystem, should 100% go align with these SROs, or folks are going to be applying for SROs in the fintech world. Right? We ourselves are one of the founding partners. When I say we, Axio is one of the founding partners of DLAI. So we've played a very crucial role, and Gaurav Jang have been very, very actively involved in making sure you're doing things the right way, building people who are doing it, interacting with the regulator frequently. So it creates an avenue for you to ask a question, get in touch with different experts to understand what they're thinking, how they're thinking, right? And I think RBI has got an innovation hub out here in Bangalore. They have a dedicated senior person who's sitting there, helps you understand. And to be fair, they have a lot of amazing events. I've been part of it. My CPO has gone to one of it. We got a conflict environment. You just go, talk, ask questions. You see what the ecosystem is doing. See, dialogue is the only way, right? Because unfortunately or fortunately, things are open to interpretation and misinterpretation. Right? And what I think truly matters is the intention. What are you trying to achieve? Because sometimes the manner in which you execute it might make it look like you were trying to do something else. But being very clear on my intention of doing this was this. This is why I was trying to do this. That's why I structured it like this. Helps the regulator understand, is this too harsh? Can I create some leeway to allow for these things? Or they're like, you know what, we understand it, but there are too many people doing this the wrong way, so we will not allow this to happen. Right? So this is how I've looked at the regulator this way, right? So the whole Paytm fiasco, in terms of like how the regulators looked at it, I've always wondered what happened. I have not managed to get any insights on that. But I also am a big believer of entrepreneurs. Maybe it's 9 years of working in the startup ecosystem. I would never bet against anyone, least of all one of India's biggest, because nothing brings out the best in entrepreneurs than when their backs are to the wall. I've seen it from very close quarters, and I'm convinced the V2 of whatever is being built out at Paytm will be equally as powerful, right? Because you learn, right? They've told, I'm sure they've interacted, they've learned, they've got some learnings out of it. They will come out with something. Too many smart people led by a man who's clearly passionate about what he's building. They'll be back before you know it. But also, like I said, no regulation to regulation. Right? Imagine that. See, everyone who grew, and then suddenly at that scale, you have to make changes. It can be either way, right? So it's kind of hard. So yeah, like for me, it's all about constantly learning, all about tinkering your processes to the ecosystem outside, right? That's why I keep saying, even internally, I say, if there is Bhangra being played, please do Bhangra. Don't do a ballet to a Bhangra. You've got to keep listening to the music that's being played outside, be in sync with the beats that are coming there, and you're good, right? So just have to figure out what the beats are.
Yeah, absolutely. And I think VSS is a phenomenal entrepreneur with such hunger and vision. I think Paytm will be back on track in no time.
100%.
Even I don't like to bet against.
You never should. Because it's a different, like I'm telling you, the respect I've earned, and like I've grown to give entrepreneurs. What they go through is not easy. It's not fun. As operators and employees, sometimes you come, you go, you change. And I think because I've hung around for so long, I've seen, what they go through,
Yeah.
emotionally, personally, physically at times. It is very draining. It is very taxing, and it's a very, very lonely job. And all the glamour be damned for a minute, because the glamour comes and the glamour goes very quickly. It's a hard game.
Yeah.
So the respect I have for these guys is immense.
And talking about founders, there are many companies that have come into the limelight because of corporate governance issues, where a lot of financial mismanagement was going on within these companies. As an insider, tell us about what were the founders doing, what mistakes were they making from your observations, and what is the way for founders to avoid these situations?
Hmm. I don't know what the founders are doing, because I'm sure it's very hard, because every company has a CFO. You have the founders, you have your management team, you have your auditors, and then you have your board, right? So
Yeah.
in our company, for example, we follow certain accounting policies. The auditor vets those accounting policies. If we're changing something, we go to the board and be like, hey, by the way, we're changing all of this. This is good. This is bad. Do you have a view on this? And we continue doing this, right? Every company operates like this, not unique.
Yeah.
So when I hear of these stories, the questions I immediately get are, if there's an issue this year, what were they doing last year? What has changed? What did the auditor think of it last year? What did the auditor think of it this year? Has something changed, right? As in, has a regulation come? Has somebody said something about the way it was being done? And as a result, are you asking it to change, right? Now, see, corporate governance issues, I think, boil down to, end of the day, a combination of people wanting to show hyper growth. We come back to the first topic I had, right?
Yeah.
If you want to show a bunch of things, you want to show you're growing faster, you want to show you do a bunch of things more, it comes down to things like this. If you're able to constantly tell yourself that, okay, I do want to project myself as being growing, doing whatever I'm growing, but I'm never going to lie about my numbers. I'm never going to take a shortcut and procedures. I'm going to make sure everybody knows everything. It allows a benchmark, right? And that's how we operate.
Yeah.
We are the sort of people who are like, if there's bad news, I'm going to call you and tell you today. If it's good news, jab aayega, jab aayega. There's that cynicism with which we all operate, right? Even my team, for example, I tell them, if something has gone wrong, if there's bad news that has to go to the founders, come tell me. I'll go deliver the bad news, but come tell me immediately. If there's good news, when we are doing the P&L or the MIC, like, please, आप लोग बताओ, फर्क नहीं पड़ता, because अच्छा हो रहा है. कोई अच्छे को, no one questions when things are going well too much. Like, hey, good. This is all working the way it should. The hard parts are, how do you truly take owner's responsibilities, fix when things go bad, right? And I truly like fixing things. I like that thing. So I'm like, yeah. And very similarly, Gaurav Shankar, similarly with their one-up, right? Is something's going bad, pick up the phone, have an honest conversation. This is working. Something's going good. Either they hear it outside or they'll pick up the phone and they'll do it. But transparency with folks is very important,
Yeah.
right? And I think internally for us, that alignment has always been there. That, boss, this is one thing we will not do, is project something that we are not. Sit down and put our head down and do it well, right? So, see, very honestly, I know you said startups mein corporate government hai. If you go back and look at public companies in India,
Yeah.
startups, no startups, 20, 50 years, there is a wider issue, right? So I don't know if it's a startup thing, but if you look at public market, and like, I come from Hyderabad, yaar, so matlab, we've seen
Let's
them.
talk about that also a little
The,
bit because we see
the,
so many. There is such a frenzy around SME IPOs these days,
yeah,
and small caps have also delivered like 40-50% returns in the last two,
yeah,
3 years, right? So everyone's sitting on inflated portfolio numbers. But if you think about it, the churn also in the SME index or the small caps portfolio side is the maximum, right?
maximum.
When you
Yeah,
look at how many companies go public versus how many actually stay listed or get discovered for
correct,
financial problems within the company. There are so many of those issues, but they don't get highlighted in the press as widely, I guess, and that's why a lot of people don't know about it. But what's
correct.
your take on what's happening in the public market?
The public market take for me is very interesting, because I think I was actually reading about this. There is so much supply. coming in today, it's not funny, right? The monthly SIP numbers, if you look at the FIIs versus the domestic investor, we have more domestic investors for the first time, and we're still, by the way, only like 3-5% of like this country investing.
For the first time
For
ever.
the first time ever of history of this country.
Yeah.
So look at the growth we have seen. So, and I keep having a debate with a lot of my friends. Right now, I'm not very active in public markets because I think it's a full-time job, and I already have one. So I'm like, I have a couple of friends who do this full-time, so I'm constantly debating, taking tips on where to invest in them and kind of managing it. But it's very hard. How do you know that this valuation is fraud? Because you're like, with the PE multiples, that looks mental, right? That just looks. So I have a feeling the supply will actually, this is why everyone's waiting for a crash. It's been going on for a year and a half. ये फटने वाला है, ये फटने वाला है, ये फटने वाला है. एक दो दिन फटा, 3 दिन में back. I have a slightly different take. I think if not short of some massive macro event happening, I think fatega nahi, stagnate karega.
Yeah.
So what you will see is that inflated portfolio appearing inflated over a long enough time for you to say adjusted growth will be that. But the thing is, mentally, we don't look at it like that, no? Because it's gira nahi market.
Yeah.
But staying at the same level for long enough is a correction also. Right? There is time value of money. So if you were at X in 1 year and you're X in 2 years and X in 3 years, your money over a 3-year period, the CAGR will come down to what the normal is. The 40% CAGR isn't sustainable beyond a point.
Yeah.
So I think that is what is happening because there's so much supply.
Yeah.
Funnily enough, I had my parents had invested in a fund. Yesterday they redeemed money back, going like, look, the valuation seemed too high, and we don't think it's fair for us to hold your money. Take the money back. In fact, I won't charge you any management fee on this as well. I've sent you X percentage of the drawdowns back.
Okay, that's interesting.
Right? So now look at that. This is now people saying I'm sitting on money, और मुझे investment opportunities नहीं है, और मुझे ये valuation बहुत high लग रहा है. Just it happened last night. So my mom sent me a saying, what is this money that has come? And I was like, I have no idea. I'm like, why don't you ask the RM? And in the morning, Ray, she sent me the email that the fund sent. And I was looking at it and I was reading through it.
Across different PMSs as well, where, certain fund managers have just stopped taking money because they say that, we don't have any opportunities to buy in this market.
Correct. So they are like, look, this is just mental. I'd rather not take your money, or what I'm sitting on is enough. So please don't give me more money.
Yeah.
And I think it's fascinating, right? Because that now means if, let's say, this continues for the next year, where are people going to invest?
Yeah.
This is where I was telling you.
The tech IPOs that are happening.
I mean, like, see, they can happen. People can do it if they believe in it. And if they think they have the appetite to stomach the ride, do it. It boils down to, do you have the appetite to stomach these rides or not? And if you have the appetite, do it, right? If you don't, please don't. But I think it's a very interesting time because I didn't see this happening. And now I'm just like, there's a learning coming soon about like how to navigate this. But by the way, I think the one area where money should go more is debt mutual funds. And you were talking about this.
Yeah.
But I think debt mutual funds should start seeing. The only problem is you have to wait 3 years, indexation, blah, blah, blah. There is no indexation now, but 3 years with the whole drama around it. But I still think it's worth a bet for long term. Right? If you have a 5-6 year horizon, I think debt mutual funds could be an interesting space that I'm still like doing my own research on it. But I think that could be fascinating to get. See, you can't constantly get like 16, 17, 20% CAGR.
Yeah. While this is very interesting advice, but this is not financial advice.
This is not. Oh, good Lord, no. I'm not playing any. I'm not doing any influencer games, guys. No advice. Please, no advice.
Yes.
I don't want to do that.
That disclaimer.
This is me. This is just me. Yeah, please put out the thank you.
Although it's very interesting, right? Like two people on the private side who also are exposed to angel investing in a big way, and also different asset classes. You are actually one of the very few people still recommending debt instruments because I think the appetite for risk taking has gone up so much in our generation and younger, where everyone just wants to do equity or even angel investments or alternate classes or crypto. So the learning about debt or FDs, now they are like, you are actually shamed for talking about debt instruments, right?
Yeah, but see, like FDs I can understand because everyone goes like inflation, FDs, erosion to hair type, and that's like 101. So I respect that view. But again, I also think FDs is a function of what is the goal of that saving, right? अगर आपको principal protection करना है, nothing like an FD.
Yeah.
What is that pool of money for you? Wealth creation FD से नहीं होगा. Right? So if everyone is like the FIRE philosophy that is like all over Twitter, मतलब 40 पे retire होना है, 45 पे retire होना है, so then you all want to take risks, right?
Yeah.
But I think, see, if it works out for you, power you have the risk appetite. The way I've always looked at this is, boss, please be aware of the consequences of the action that you're taking. अगर आपका सारा पैसा high risk में है, when times are good, it is awesome. If something goes off, please make sure you have that buffer built in life.
So what's your personal allocation strategy? Like, how do you decide how much?
Yeah, देखो, I will not lie. I come from enough privilege that I can do enough high risk bets that God forbid something happens, I can go to mom and I'll still be fine in life. So I have a lot in startups, real estate, and my equity market bets are actually SIPs. I have very few stocks which friends do from long-term investment, but I do a lot of SIPs across different plays. So there will be plays around all-weather investing, which is very conservative. And to be very fair, despite it being conservative, it is giving you 15-16% because the market frenzy has been such right now, right? Yeah. So indexes, I'm a big passive investor because I don't have the time to be a proactive, active investor. So I don't know if I'm the right guy to even talk, but this is the way I kind of look at my life is I love startup investing. So I do decent amount over there, more than what I should. My wife keeps reminding me constantly about that. But it's, I think, a balance, right? And it comes because I know if I need liquidity, it's available. Otherwise, I think it's a terrible portfolio that I'm building. I'm like, it's like I'm constantly working towards like saying, okay, time. My brother and you were talking about it because he's in the US and he's in the startup ecosystem as well. And he's like, my illiquid asset is just mental right now. And we were both comparing notes and we were like, okay, this is not good. We're both kind of doing this the wrong way. So now we're proactively building a liquid base because that's what we were doing, right? And it completely comes from, your background, who you come from, your equation with money. People need to understand the relationship with money. I'm like a big believer in that. It's clear to understand what money means for you and how you want to do it. And then take a call, depending on the consequences of whatever it is. Know the pros, know the cons, and roll the dice.
Yeah, and let's talk about the illiquidity part a little bit more, right? Because I think a lot of people are getting into angel investing because there are so many more platforms which have come up where everywhere you can invest as little as 1 or 2 lakhs even to get into a company. So, like, what do you think of that broadly? Like, there's so much retail participation happening where people might not even understand the asset class altogether. So, while there is a hope that these companies will go on to replace the incumbents in the indexes in the public markets, but that is such a far-fetched dream for most of the companies, right? So like, how would you suggest people think about the private market space versus public markets?
I think you should do angel investing if you're willing to lose all this money.
Yeah.
That's step number 1. Build a portfolio worth X if you can live life without that X. Right? So you have everything else sorted. आपको ये punt लेना है. It is a punt. Let's not like Kira said. Maybe a lot of guys are not going to like me for saying it because there is just no way a seed stage company. You believe in the founders. You like what they've done. They were successful in a previous venture. They have an interesting idea. Execution is everything. We've seen if first mover advantage or brilliant ideas or brilliant people were only successful in life, then sure. But we have seen that not to be true all over the world, right?
Yeah.
So for me, angel investing is everything else is taken care of, and I'm like, ठीक है, इस महीने का इतना एक interesting startup है तो कर लेंगे. That's literally how I did it, right? Because, and I strongly urge folks who want to enter this is whatever you have built today, if that is zero tomorrow, if there's zero change in your lifestyle, power to you, do it, right? But if that is going to have an impact, you should not be in this space. Because angel, and like I actually meet a lot of folks who are like, we want to democratize angel investing. We want to make it an investment class. We want to make it a different asset class. Please don't. Well, don't.
Yeah.
It is not meant to be an investment class. I know what people are trying to say. They're like, it's an alternative to, but imagine the guy giving 1 crore to a PE fund because he has 1 crore to invest. And who is the guy managing that PE fund?
Yeah.
Versus you putting money in a company directly. What research have you done? Like, I know what research I do. It is garbage. I know you and me have these chats. Yeah. And you're like, kya lagta hai? Acha, okay, fine, let's go. So I'm like, Shrishti, you've done your work. I trust.
I
and
don't like it when people invest.
I know, but you know, the thing is, because like, and you and me have done this over time. We've had informal chat. So today I can be like, okay, Shrishti, you're coming recommended. I can like, okay, you know what? Let's go.
Yeah.
It's a very different mindset, right? That you need to have on managing and doing this. So I think people need to be careful. Like, I tell you how I look at this. And I actually, funnily enough, I heard Kunal Shah say this somewhere. And I actually thought it's true. He's like, I don't do charity, I invest in startups. I found that to be so true because I said, look, this is, if it works, the additive advantage to the nation is 10 times more, right? Between solving a problem to employment to wealth creation, who knows where things can go, right?
Yeah.
I think that's beautiful. So for me, I have a little bit of that thought process, right? It very resonated with me because that's how I thought about it. I'm like, jayega to jayega, kaam karega to acha hai. Okay, I'll make money, great, but like somebody else will actually do, and you'll be a part of somebody solving a problem.
Yeah.
Not everyone's going to have awesome ideas, but you can be part of somebody else's journey and be like, oh, you know what, I contributed a little money. But the math house.
Yeah.
That's it. It's bragging rights. What more do you have? You didn't build it. You didn't think of the problem.
Yeah.
But you were like, oh, like, I did this. So I think that mindset, if you have, is great. But if you're saying like, oh, 10 crore dalunga aur ye 10 saal mein 1,000 bane, bhai, zero bhi ban sakta hai.
We've all
like,
had those
okay.
Conversations, no?
Yeah.
Like, this is 60x easy, 100x
yeah,
easy.
And I'm like, how is any X easy?
Yeah.
Sometimes, like, I'm like, come try raising money today. 2X is hard. Forget 60, 70, 100 and all, right? So you're like, yeah, this is a different ballgame right now, and it's going to work a little differently. So you have to think about it differently, and you have to try it. So angel investing for me is like, please. I think you need to make sure you're getting in, knowing that ये नहीं आएगा पैसा तो बुरा लगेगा कितना गवाए हो, but your day-to-day life is sorted. You know what I mean? It's not like you have to make lifestyle changes.
Yeah.
So don't do that. That I think is too risky.
Yeah, I think that's great advice because I've often met people who want to invest all their capital in the first year they start deploying capital, right? Which is just crazy to me.
Because like, what is the gestation period? Yeah, 3-5 years. You'll be fortunate if you get an exit in 3 years.
Yeah.
Right? Like notional value increasing.
For 8 years, exits don't come in 3 years. I think
exactly.
That was just an outlier event, during the bull run where we saw multiple exit cycles. But it doesn't happen that easily.
It doesn't. So you have to wait. So imagine, this is why I say take that money away because you will not know it's 0, 1, 1.5 or 10, 5 years down the line or 8 years down the line. So you should like this money doesn't exist for you.
Yeah.
You will be reminded of this money every year when you file your income tax. That's it. Because your CA will be like, give me your list of shares. That's the only time you will remember this exists. Because like, आपकी daily life में ये ना आपको dividend दे रहा है, ना how many of them even send you an update. They will, out of my entire portfolio, ईमानदारी से साल से 3-4 लोग भेजते हैं.
How many portfolio companies do you have now?
I think have close to about 30-35, but it's been built over a 3.5 year period.
Yeah.
Right. So I normally try to do about 10 companies a year. Right. Unless I break that rule for you every now and then when you're like, this is a great company and you're like, oh, fine, let's do this. But I'm like, it's one of those things, right? I'm like, you need to draw a line saying X rupees ka punt I will take. And otherwise I'm not going to take it. So that I think is important.
Yeah, I think very interesting insights on the angel investing bit, but can't leave you without talking about the fundraising experience that you've had over multiple cycles, right? We went through a boom in 21-22 period, saw major decline towards the later part of 22 and 23. Where are we currently in the cycle? And as someone who's gone through these multiple fundraising cycles, how would you suggest founders approach this strategically?
I'll start with your last question first. Please build something that you believe in. Don't build something because the funding environment for that is hot today. Because trust me, it will cool down in 6 months and you will have nowhere to go after that. And I've seen this happen in every sector. So if you are truly not passionate about a particular problem, right, don't. Right? And okay, you don't have to be passionate about it, but you truly believe it's a gap and you want to solve this gap. And you can get passionate by building it also. That also happens. Right? So sometimes you just stumble across the idea, oh, this is interesting. ये कैसे हो रहा है, ये कैसे हो रहा है, ये कैसे हो रहा है, and you're like, oh wait, ये तो कुछ बन सकता है, कर लो. And you become passionate about building it while learning about it, right? So that happens. There's a lot of founders I know have stories which say that, oh, like, I went through it, so मैंने आके उठ के करा, and that's awesome.
Yeah.
Some people don't go
I
through
think
all
those are
those.
the best because it
Those are
comes
the
from
best.
a tough,
Very tough
real
space. But also, like, life may not everyone goes through those experiences also, right?
Yeah.
So when you are someone who wants to build and you have not personally experienced, but you know a problem statement, but you can execute and build well, then build well. But I'm saying, but believe in that problem, that there is a true problem. Don't believe that, oh, if I do this now, मुझे 2 million, 3 million तो मिल जाएगा, अभी देखते हैं. वो देखते हैं के चक्कर में, I think a lot of stuff goes, right? And that's when it gets very dicey. So I'm a firm believer in do something if you believe it's a problem to solve. Even if 10 people tell you no, find that one guy who will say yes. Then it's worth, right? Then it's worth building. Then you, all of you are equally passionate about kind of building it together, and the VCs, the investors, the ecosystem will come out to kind of support it. So I think that is important from there. Look, funding cycles 21, 22 is just now from between 2014 to 2024. I've lost track of the bull runs and the white swans and the bear runs and everything they hear.
Yeah.
Right. And the one thing that doesn't change for me is, look, during bull runs, different metrics come. Right. People look at different things, give a multiplier on different things. I think everyone should be very honest about what they're building. What is the most traditional metric for that business? And make sure that traditional metric is always moving in the right direction, up or down. Like, I don't know what that metric is. So revenue up, cost down, combination, figure it out what that metric for you is. Because if that most traditional public market metric is moving in the right direction, even if any VC, anyone else comes and wants to put a proxy on any other line item in your P&L and give you a multiplier, it by design will work in the right direction for you.
Yeah.
Because there's just no other way. You can get that.
Most VCs will do anyway, right?
Like
some
VCs,
that
correct. Everyone will have a different way of looking at the world.
Yeah.
And how do you know that view is right or wrong? You don't. They work, they don't work. So I'm like, don't solve for a VC. If you know in the public market, this is the metric that okay, flip it. If you want an IPO tomorrow, वो metric चलेगा ना? तो उस metric पे build करो ना, because अगर आपका सपना सच्ची में $5 billion कंपनी build करना है और आपको IPO करना है, तो यही metric तो आएगा.
Yeah.
Unless magically by then the public markets also have moved to your VC-led model, then awesome. But who knows? So if you're conservative there, I think it'll help you during boom runs. You might get someone giving you a crazy multiple, but at least that core foundation is strong enough that if you find that mismatch is there, you can build towards it, right, without having to fret about it. So that has been my core takeaway in this 9 years, is find that right metric and just keep building that.
What is it for a company like Axio?
And NBFCs net worth, what else do you have?
Yeah.
Book value pay multiplier ही होता है. Everyone's 4 times, 4.5 times. If you believe you're different, you might get a higher multiple on it. Now, obviously, different stage of evolution, people are happy to give you a higher multiple looking at different segments. But I know if I want to IPO 10 years from today, book value is everything, right? So for an NBFC, a book value is everything. So you try and make sure everything you're doing is net worth accretive and building in that direction.
In such interesting times, right? Like I remember 4-5 years ago, investors used to tell me that, NBFCs and banks, we don't want to fund, or NBFC plays we are staying away from. And in the last 2 years, so many NBFC plays have gotten funded. That is also because, those are the plays that actually have an IPOable outcome possible, right?
See, I told you this in the beginning of the process. All roads lead to Rome, and Fintech, all roads lead to lending. Because that is the only monetizable thing you have today at scale.
Yeah.
Right. So anyone who's able to come up with something else, the margins are there. Right. That's why everyone wants to lend. Everyone believes you can. It's hard. We also joke around that billionaires become millionaires by starting lending companies. So, like, it's a hard business, right? I mean, this is why I have so much respect for a Bajaj. I mean,
this is like numbers, right? In terms
look at what they built. I'm a big fan. Fortunately, I was trained by an ex-CFO from there, so I used to listen on how they ran and how they run their processes in the meetings that they run. And there's so much to learn on how to run a lending company in this country. So I think it's, so you got to stay true to those core principles. Because lending, co-lending hasn't changed. It's like
Yeah.
one of the oldest professions in the world. People did it without computers earlier. People do it with computers today. But the essence and the underlying factors haven't really changed. So I've
And
become a bit of a traditionalist with that, I think, in that view.
And if you just zoom out and talk about, margins or profitability across different segments that people end up lending to, since you have the experience of MSMEs versus personal loans, etc., broadly, how would you classify that?
See, the beauty of margins is it'll all depend on the company, which stage it's in, and the cost of funds of the company. Someone who has a cost of funds of 7% can deliver brilliant NIMs even on a 10-11% personal loan, right? So a Bajaj Finance cost of funds is, I don't know, or 8% because they're even a deposit taking NBFC. So like it's gold, right, for them.
I think that's
Someone
the
like
holy
me,
grail in the ecosystem, right? Like a deposit.
and but
taking.
it's that's it. But you're not gonna. I think it's very rare. It's very hard to get a deposit taking NBFC license anymore.
Yeah.
So you now have to then start making your way up the rating ladder, starting at an investment grade and getting into the A's, and with the eventual aim of being a AAA for your NIMs to be anything. So product agnostic is to first start with a product that can make you profitable, grow enough that you start climbing up this ladder. Then kuch bhi karo, eventually paisa. Yeah, home loans go at 9 today.
Yeah.
Net of OPEX, I'm sure they're not making a lot of, it's not crazy NIMs, but it's stable. It's secure. It allows good, healthy AUM at low risk. So to allow people to take higher risk, right? It's the constant balancing of low risk AUM and high risk AUM to give you that blended ROA that everyone is chasing in the world, right? So I think that's it. So I don't know if I can classify it because I'll be like, which company and what's the cost of funds, and I can tell you, but it's hard. So I think if you use that metric, then you're like, oh, at 7%, at 10%, at 12%, 18% cost of funds some people have when they're just starting off. So for 18% guys, you have to start really high. And then you got to come down, right? So those margins end up playing, or you specialize in small ticket lending and charge higher APRs, but that's a different animal altogether, right?
Yeah.
Very few people get that right. But if you can, awesome.
Yeah. Thank you so much, Akshay. I think this was a fascinating conversation with lots of deep insights into the fintech ecosystem in India today. And always love chatting with you. And I think we'll be investing a lot more, hopefully in the fintech space also, if you let me.
I'm looking forward to doing fintech investments.
Yes.
And thank you so much for having me on your podcast. Big fan of how quickly it's grown and how the diverse topics that you cover on it. So thank you so much for having me.
Thank you, and appreciate you taking time on a Friday evening to come and be with us.